afternoon, everyone. My name is Andrew Barber from Targa Communications in the UK, and I want to welcome you all to this Investing in Germany Roundtable regarding healthcare and senior living real estate. I don't know if you have it in Germany, but there is an English saying that goes, the only certainties in life are death and taxes. While this may not be the only certainties, what is true is that the older we get, our needs and expectations of how we live our lives change. And this is reflected in the homes that we want to live in and the healthcare support that we will require. Germany's ageing population and the implications it has for society as a whole are widely understood. With the largest bulge in the population now rapidly approaching retirement age, what is apparent is that there will be a particularly high demand not only for homes that are suitable for people to live in during their retirement, but also for healthcare provision over the next 20 or 30 years. So how is the real estate sector reacting to this increase in demand, and what are the opportunities for investors? To answer these questions, we, along with our colleagues at REFIRE, have assembled a panel of experts in the world of retirement living and healthcare real estate, who, over the next hour or so, will discuss the situation and the possible opportunities. Our first panellist is Berthold Becker of TSC Real Estate Germany, where he has been managing director since 2018. Headquartered in Berlin, TSC Real Estate is a specialist in healthcare and social real estate and provides clients with value-enhancing property investment opportunities. Our second panelist is Dr. Michael Held, who is CEO of and founder of Terragon AG. Dr. Held is a specialist in the development and realization of properties within Germany's senior living sector and has over 25 years' expertise in the provision of high-quality, age-appropriate real estate. We are also joined today by Paul Muno, the Head of Investor Relations and Managing Director of Principal Real Estate in Germany. Paul has responsibility for establishing and building relationships with capital investors in the German market, and under his leadership, Principal has invested in many senior living and healthcare assets across Germany. Our final panelist is Samuel Vetrak, who is founder and CEO of Bonard. Bonard is a global marketing intelligence and advisory firm that assists with data strategies and assessment in senior living and other residential asset classes. Samuel has over 20 years' experience advising investors, developers, and operators. Our lead moderator today is Charles Kingston, CEO and publisher of REFIRE, the English language online publication for international investors, which is focused exclusively on the German real estate market. Before we start a discussion, we are very lucky today to have a brief overview of the German senior living market from Samuel Vetrak's colleague, Julia Momotiuk, who is the Senior Research Manager at Bonard. The market overview Julia is going to provide us with is drawn from a comprehensive research study into the senior living market in Germany, which was undertaken by Bonard in partnership with Mosaic Asset Management last year in 2020. So I would now like to hand over to Julia and ask her to provide us with the overview of Germany's senior living real estate market.
Thank you, Andrew, so much for the introduction. Hello and welcome. To start with and following up on Andrew's introduction, we will indeed now talk briefly, I think up to 5 minutes, about German senior living market. We will present this study we did together last year with Mosaic Asset Management, specifically on Germany. We at Bonard, as a market research and advisory firm, have vast experience in rented residential asset classes, senior living being one of those. This report referring to today was trying to provide more context and content to the market to make it more transparent. We focused primarily on private assisted living part of the whole senior living sector in the country. It was a project for over 5 analysts in our team who are taking care of measuring primary and secondary sources available. to provide up-to-date insights on the demand, supply, pipeline, future product coming to the market, as well as rent levels in the senior living market in Germany. For all interested parties, this report is available to be downloaded. If you would like to, please contact us. Going into specific details and actually analyzing the trends of the market, this is a brief summary of the report findings that mirrors the trends going on. One of those being growing population of seniors in Germany. This is a strong trend with aging population. The share of seniors aged 60 plus in the country will increase from 28% in 2019 to 31% in 2025. The research identified the fact that the demand is stronger than supply, or even future supply, those senior living beds coming to the market. The sector is in a very good condition in the years to come. Aside from the demand, the supply was measured as part of the research objective. I have to specify that we screened in detail top 20 German cities, analyzing supply in those major locations. Those were picked by senior population, so cities with the most population, 75 plus. And there were almost 65,000 assisted living apartments in over 1,300 establishments in those 20 German cities. I will address a little bit more later on what we call those private assisted living establishments, so to shed more light on the terminology in the sector as well. Moving on to the next point here, also like to talk about future supply, future stock coming to the market with over 300 buildings. It's expected to enter the senior living sector in Germany. Also, a point on the slide here is increased demand for residences outside the largest cities. I just mentioned to you those 75 plus locations, but obviously the demand exists aside the main metropolitans. It's also supported by the scarcity of land plots available and lower land prices that will satisfy the unmet demand because seniors also need accommodation there. Taking into account supply and demand together, there is an indicator of provision rate that we analyzed during our research, and by 2025, the provision rate surprisingly will decline. The increasing population will not be satisfied by even the future stock at the market that will come in. It was analyzed and seen actually across all 20 cities in Germany, except Duisburg. Moving over from those key findings, here is the terminology I promised earlier. So to analyze the market in Germany for the senior living, we try to align it and make it comparable also as we look at the sector in other markets. Namely, we have made a similar study in France and preparing another one in the UK. So to analyze the market as a standalone, but also to have it and be comparable to other regions, that this typology and terminology was set. So all assisted living establishments were dissected into three categories. First one is senior living establishments for dependent people. You can see examples such as assisted living communities or nursing homes. This is a regulated sector, and it wasn't main focus of our study. We rather focused on assisted senior living establishments, type 2, mainly those under private commercial ownership. For that sector, seniors, the average age of the senior is 71. They are independent, do their own grocery shopping, and the element of care is less definite as in nursing home establishments. And then third category is independent senior living. for example, community living, not such a regulated typology, and it was also part of our research here. Being brief, I thought it would be important to explain the market supply and the fundamentals for that in Germany. The number of assisted living establishments actually increased over the period of last 10 years, as you see on the slide, by 19%. Approximately 65% of that stock is operated by non-for-profit companies, 30% is under management of private hands, and the rest are under public organizations. A typical characteristic of the market is it's consolidated by the largest providers. They are heavily invested in developing their own portfolios. And the activity is shifted towards smaller cities, as I mentioned, due to land scarcity, for example. Those markets will be Hamburg or Stuttgart or Bonn. Another part of the slide is depicting the main providers, private commercial service residence providers. You can see there that top 3 of them manage over 320 establishments in total. To wrap it up, here are again the basics of the market with growing demand that is caused by aging population. Also, Germany is a market where high income of seniors is available, as well as high disposable income. So it's another positive basis of the market. For areas to focus on where the provision rate is the lowest are Bonn, Nuremberg, and Stuttgart in Germany. The pipeline in the coming period would end up to over 300 projects that will add over 16,000 apartments to German senior living market. The yields in the sector stand at 4.5% for care homes, 4.2% for, let's say, logistic or office, which is putting senior living sector on a higher points. And German assisted living market is set to remain one of the most attractive in the EU for the years to come. It will attract not only domestic capital, but the foreign one as well. Here is the next report of ours. We will focus on the UK in this year, so stay tuned.
Thank you, Julia, for that snapshot. I look forward to reading the UK report. The snapshot of the German market provides the tremendous introduction for today's topic of senior living and healthcare real estate. I will shortly hand over to Charles Kingston to lead the discussion.
Great, Andrew. Thank you very much indeed, and a very welcome to all our panelists and our audience for this afternoon. I know we've got a big audience this afternoon. It's a subject, obviously, that is on a lot of people's minds. And I hope we're going to learn a lot this afternoon. I'm glad we were able to start the presentation this afternoon with that sort of overview of the senior living sector. Of course, it is important to remember that this afternoon we're talking about healthcare and senior living, both of which all belong to the whole category of, I suppose you could call it healthcare. But within that, obviously, there's a lot of differentiation. And we'll be looking at some of those different segments this afternoon. With that in mind, I'd like to just ask our 4 panelists for a brief 1.5 minute, just for them to present themselves. And in the light of the fact that that there are different segments that we'll be talking about this afternoon, just briefly explain what your company does in 90 seconds and what the key selling points of your business are. Perhaps, Dr. Held, I might start with you, as you're very much an established member of the senior living community in Germany.
We concentrate, absolutely on the service residences, service living. We built nursing homes and service houses in the past, but now we concentrate on senior housing, on service living, because we think it's a better market and it's a market with future. I think the market for nursing home now is a little bit overcrowded in the moment. overestimated and overpriced. We would see it in this way. Too many investors, and I think now the yields are decreased to 4%, not as Bonard said with 4.5. Now we are at 4%. It's a factor of 25, and it's even more expensive, I think. In reality, we are with 28 or 29 because the portfolios in nursing home have good qualities and very bad qualities. And if you make an adjustment in quality,
right.
You have
Dr.
a really high price.
We'll get back to many of those points later on. I know we'll be covering them. No, not at all. No. There are plenty of points. Let's just get a word in from all of you, first of all, just to announce to our audience precisely what your particular strengths and interests are.
Yes, for us, the service living is a focus on our activities now, and we see not only the top cities, even the B and C cities in Germany, as interesting for us, because the growth in service living will be in the cities.
I think you'll find some of the others might agree with you there as well. Berthold, can I go to you? Talk to us, please, a little bit about TSC Real Estate.
Yes, thank you, Charles. Hello, everybody. My name is Berthold Becker. I'm representing TSC Real Estate, which is first and foremost an investment and asset manager. We are providing all sort of clients, mostly institutional clients, with investment opportunities and providing all the services which are required when investing in real estate, meaning from strategy, definition of strategies, acquisitions management, operational management, technical management, accounting, and all of that, and including sales. We have recently established a healthcare advisory business because we think that the opportunities and potential of the entire healthcare sector can be utilized combining the operational side of things and the real estate side of things. And to a certain extent, we also are a developer, minor extent. We are to a majority active in Germany. We have 1.5 billion assets under management, 108 properties in Germany. We also advise clients in other European countries such as Italy, Spain, Benelux, Luxembourg.
Great. So just a quick question. Now you invest in both healthcare, for example, in Ärztecenter, doctor centers, Reha,
right,
as well as senior living. Berthold, is that correct?
Right. That's absolutely right, Charles. Thank you for that. Historically, we are quite long in the market, more than 15 years actually, and probably one of the players in the market who have kind of accompanied and even maybe developed the market to a certain extent. Originally, we coming from the typical nursing home, inpatient nursing home sector. Over the last couple of years, we have extended our area of activity because we think there is a lot of potential, not only in the nursing home sector, but also in the broader healthcare, real estate and healthcare sector. Our range of activity starts with medical office buildings, continues with therapy and rehab centers. We focus, of course, also on senior living and assisted living, and not least on inpatient nursing homes.
Inpatient as against outpatient. Yeah, very good. Paul, you've also had a lot of experience in this industry in Germany. Tell us a little bit about Principal Real Estate and your involvement in the sector.
Principal Real Estate is a worldwide investment and asset management company, now I guess ranked number 10 in the world. In Germany, we have nearly 2.1 billion assets under management in different sectors. And one sector we are covering is the healthcare sector. We are running two funds. The first fund is invested or has invested, because it's closed right now, only in care homes and assisted living. And the second fund has a much broader horizon to invest in. It's the care home, it's assisted living, it's the medical office building, up to the rehab clinic, if it's on the plate.
Great. Samuel, you were ultimately responsible for presenting or for creating the data to kick us off this afternoon. And obviously, according to that data, there would look on the surface of it to be a major market opportunity in Germany. Why did you focus in on this particular market? I think you've one other report so far. Is that right?
Indeed, it's one of the few reports, counter reports we have produced. Well, we as an independent research firm, we are trying to document the sector per country in a way that it's standardized, universal, it's comparable. We sort of distributed the market as a free report so that the market can be sort of more transparent and therefore liquid. And then as a company, on top of that, we provide further support on individual basis, like the city scans, feasibility studies, underwriting reports, financial simulations and projections, or simply surveys, customer surveys, opportunity identifications, and then transaction analysis if there is any. And this way, we try to be sort of a go-to address for data in this asset class in Germany or in German-speaking world, as well as in France, UK, and globally, as we are distributed across about 150 markets.
Great. Okay. Well, look, I know we have quite a number of international investors listening in and watching in as well this afternoon. So that's one reason why I can't escape really asking this, but we've had practically a year of COVID now. And while there is light at the end of the tunnel, maybe you might all just give your views as to what, if anything, has changed. We've noted over the years a rising interest in the market in Germany. The demographics have been on the table for people to see. It's an aging population. And yet at the same time, what has happened over the last 15 months, if anything, in terms of investor interest? Speak from your basic experience, what you're seeing in the marketplace. Paul, perhaps I could just ask you to kick that off. You're part of a major group and you know what a lot of the investors are thinking.
What we learned over the last 12, 14 months is that the international and local German-focused interest has grown up. And what we see is that the entire healthcare sector, including care homes and the residential living for the elderly, is moving in a direction where it looks like an established sector for institutional investors. And what the audience learned is that even in a difficult economic environment, as we have seen during the COVID-19 crisis, a sector like the healthcare sector is moving very smooth, with no tops and with no extreme movements in the valuation, neither in cash flow. So it looks like that investing in this sector could add a little bit of risk reduction in an institutional portfolio. This is what we have seen and learned.
Great. Berthold, what are your investors? You have an international investor base as well.
Well, our international investor base are mostly international and in part German. I would, in general, agree to what Paul said. I would even underpin that. We expected from pretty early at the beginning, after the beginning of the COVID crisis, that capital will allocate much more to healthcare and to senior real estate, and exactly that happened. Of course, it also relates to the difficulties in other sectors like retail, like hotel, like office. But bottom line is declining yields by 75 basis points. I would even say in part 100 basis points over the last 12 to 15 months. Another experience is that many more institutional investors are moving into that healthcare real estate sector for various reasons. One of that is for sure that the nature of the asset class, the resilience and all of that, the independence from economical cycles, they have proved, all this has been proved right. And again, I think in part it relates to the difficulties in other real estate sectors. So we have a bottom line, again, much more focus on that sector, much more capital is going into the sector. Also international capital, but also domestic capital is going into the sector, with the result that the availability of stock is even more difficult. We don't see that necessarily positive, that development, because for sure it also relates to the current interest rate environment. As Dr. Held already mentioned, the prices are being paid for the different asset sectors and the different properties, in our view, is not necessarily justified. Although in general, I think it's still, compared to other asset classes, is absolutely the right thing to move into that sector. And I think it's just depending on looking a bit more in detail, doing a bit more analysis, and focusing on the right trends, which are for sure developing. So much more focus on that, on the sector in a wider range. We will certainly come to that later on a bit more in detail.
But that means you are, in fact, actually seeing a recycling of investment capital into the sector, helping to drive down yields from investment capital that would have perhaps gone into another asset class a year ago, without
Absolutely.
a doubt. Paul, that's your experience as well, without a doubt?
Without doubt.
Very interesting. Dr. Held, you, as far as I know, have managed to build up your business over 20 years without having to go outside of Germany to find investment. Is that correct? You've largely been able to find funds to fund your business over the years.
Yeah, that's right. But about COVID, I think it hasn't a bad influence in the market. In the contrary, we have a increasing demand still from investors in Germany and international investors. For us, it was not necessary to go abroad, but we have this interest, and we I would say daily. And we are the developer in this panel, and yes, we create this a new product, and therefore we are contacted, but we have very well known German investors, but we like to have international investors too. Yeah.
And Dr. Held, apropos COVID, and I don't want to labor the point about COVID, but across other asset categories like office and so on, yeah, COVID has led to people starting to reassess, also consumers to reassess their housing needs, and so on. To what extent are you seeing people assessing their long-term care needs in Germany?
Charles, for example, we have a big site in Berlin now, yes, and the Riviera with over 200 units. The investment of Aachener Grund, over 90 million euros, and we are renting now our units at the moment. Yes, and we have still a big demand, and the people and the elder people come to us in our offices to look for a contract. So we will rent more than the half of our site in this year. So you see, we didn't know exactly half a year ago what will happen. Yeah, perhaps renting would take a longer time, but the experience is the people are satisfied with service living. Even in our condominiums here in Berlin or in other cities, the people are because you have services.
And I remember, Dr. Held, when we first spoke about this about 8 or 10 years ago, and you were You were in the you were practically defining the segment of living with services as against Pflegeheime or other forms of definition of nursing home, which you are not. You are about people preparing themselves to live, to stay more or less in their own
autonomously,
walls.
to live autonomously, to organize their life independent.
Yes.
And what we think it's new now. I think we closed the contract. I don't know if you read it with Agaplesion. This is a big church clinic company, the biggest in Germany, and they have a lot of experience with medicine.
Yes,
and I think their health will be have a bigger role in the service living. Yeah, in the service living. This is this is one thing, and the other thing is that we are a platform for services. This is new. The people like to have the choice. Yes, not institutional organized living if they are old, and therefore we develop our sites as a platform for services that people need to have independence. Even if they are 90 or 95 or 100, they have to have the independence to organize the life like they like. Yeah.
Yes, and I think maybe Samuel can confirm that in demographic terms there is a shift at the very shall we say final end of the market, to put it like that, where in the old days people might have gone into what they would call a nursing home, a Pflegeheim or something, and perhaps not really come out. Dr. Held's mission, I think, is expanding into lots of segments of this, so that people can pretty much live out their all their days within their own barrierefreie Wohnungen, or their own disability accessed housing options. I mean, demographically, is that something that you see clearly?
Indeed, not only we have more seniors, so almost 10 million seniors in a 75 plus years old segment, and it's increasing under the angle of 0.6%. But also we have these new patterns that are across the ages, that people like to live with services, as Dr. Held mentioned. It's an overall trend, like we have urbanization or globalization, we have the overall trend to sort of live with services and to live with choice, to be more flexible, to have options. And this is also married with the fact that there is more disposable income of seniors to afford it. So if you combine the demographic changes, the overall trends to sort of live with services and economic capacity to do so, then we see a natural trend or propensity to live in these type of properties. And while 10, 20 years ago, almost nobody considered this as an option, and people lived individually. Now about 37% of people are considering the option to live in this type of a property in their senior age.
I guess this is, from my point of view, I guess it's all right. And the high and growing demand for senior residentials is right. At the end of the lifetime, the likelihood that you get ill is even growing because we get older. And for that reason, the well-known nursing home has a very important role to play, because at the end, you can't stay a year long in a hospital. You will stay in a nursing home with intensive care. And the duration staying in those care homes will be reduced. It's not anymore 2 years or 3 years. It will be 6 months, 12 months, not longer than 18 months. And this is changing the character of nursing homes a little bit to the hospice character.
But Paul, you have an alternative to the nursing home, yes, and it's alternatives will grow in the future. Yes, you have the nursing homes, you have the serviced apartments, and you have in between hybrid offers between the nursing home and the serviced apartments, and they will the importance will grow of this part.
Yeah.
Charles, can I just
please,
interrupt?
Andrew, yes, please.
Before we go completely off COVID, which I'm sure we would all like to forget about, but question about the...
I thought we were off COVID.
Question about the sort of changing of amenities within the design of senior living and healthcare provision. Will there be changes, do you think? Does the panel think there'll be changes to the design to make them more desirable? Or will that have an impact on their value? That's a theme which has come out on some of the questions. I wondered if perhaps Dr. Held would like to talk about that first.
I don't know. I don't think this design of the nursing home will change very much. I don't think so. And for our service apartments, there will be certain changes, but not with the pandemic. More for the healthcare, there will be changes with the telemedicine. What is possible in the future, this will change. Will have certain changes. Yeah,
and I think it's also important to mention that the design element. It's also a function of money. I mean, across the whole spectrum, it is a question. It will be a question of what people can afford. Not everyone is going to be able to afford to live in the higher end managed care or assisted, it's not assisted, serviced living segment. And even there are products and categories that go for people with all sorts of budgets.
Charles, we are concentrated or focused on the premium.
That's right.
Premium, and we developed with our partners from the church a premium brand for Germany, and with a new approach to the service living.
From my point of view, the design will change, but not caused by COVID, but caused by the taxonomy of the European Commission, because the environmental aspect in a property will have much more importance in the future. And if you speak about values, a brown building with no environmental topics will get less or will decrease in value, and a green building will grow in value. And this is one side. And the other side is the search for the right people to work in such homes is even a very important point. And the property needs to be designed in a form that people like to work there.
Okay, well, we've got a lot of capital chasing all of these assets, and it's not always. There's a mismatch between supply and demand at the moment, and this is not going to get any easier, Paul, with the ESG demands. I mean, one of the issues for all of you surely is the role of, and I know, Dr. Held, you've always done a lot of your own original research. Berthold, data and finding out where to invest is a big issue. I mean, with this mismatch, how do you go about doing this? How do you identify where there is going to be the best opportunities for you to invest, given that this is there's still likely to be a shortage in the years ahead?
Yeah, I mean, you point to a very important point in my view, because, I mean, over the last couple of minutes, there were a couple of things discussed, especially on the one hand, the diversification and the differentiation, which you mentioned in the beginning. That relates not only and not rather least to COVID, because maybe one sense on COVID. I don't think that COVID has any implications at all on the sector, to be honest. In Germany, unfortunately, we have seen in Europe, in other European countries, quite unfortunate things happening in the nursing homes. In Germany, yes, we had some few unfortunate infection cases and increasing mortality rates, but overall, I think the operators in Germany have done very well. Just as an example, on our portfolio, we have had over the last 15 months only 0.3 rent default arrears due to COVID. So actually, it was just one operator who went into troubles. All the other operators managed the things very well. So I don't think that there are necessarily, maybe on processes and procedures on the operator side of things, yes. But overall, we have the impression that COVID has been managed very well in Germany.
Yeah, I mean, I didn't. This was not. These basic points, the last one you made, have really got nothing to do with COVID, other than people perhaps taking a general long-term view as part of a long-term trend as to how to set themselves up to handle their old age. And that's one of the things we were talking about. Yes, Dr. Held.
Perhaps some figures, because before it was mentioned 22,000 a lake of supply in the top cities. But you have to see the whole Germany, and there you have a lake of supply of over 350,000 units for the assisted living, and it's not only in the A's or also in the B and C cities, and these are the big opportunities in the premium segment. We estimated our 90,000 a lake of supply of 90,000 units. But who will produce this units in the coming years? In the following years, we have our target is, I think, 8,000 to 10,000 units in the next 10 years. But we haven't so much competitors now in this area. At
your end of the market, Dr. Held. I do remember one of your a study that you did a couple of years ago suggested that there could be up to 33 billion of potential in this marketplace. Not necessarily always at the top premium end, 4,000, 5,000, 6,000 a month. But at a lower level, there's still plenty of potential there.
This is right. This makes the sector so interesting for institutional investors, because the high demand of capital can only be covered by institutional. It won't be the small private retail investor who's buying one room in a care home. It has to be, and this is then, as I mentioned before, the ESG character. This is the S of the ESG, the social impact, that institutional investors have the obligation even to be invested in such a sector, because there they can really add value to the social framework of our country.
Paul, since we have these institutional investors, we changed our program 5 years ago. Yes, in former times we have this. How do you Eigentumswohnung? I don't know what's the name in English. But now we have this institutional investors, and we changed our program completely to grow, because we know it's a undersupply in the market. The people have enough money to pay for it. We have around 4 million households, 70 plus, which can afford our product. And therefore, we know we can grow, but we need more developers for this market. Therefore, we give all our data to the market, because we like to convince competitors to go in the market, because it's easier for us. If we have more developers, the market will develop. And if we are the only one, the market will not develop, because we haven't enough product. That's easy.
Dr. Held, I completely agree to basically, but I think it's not just developing. I think it's like differentiating the sector. I mean, you were one of the front runners, as we know, in the senior living sector. And at least in Germany, you developed the concept, the senior living concept, the rather service living concept in Germany, which was not established at all. It is it's not very well established yet in Germany. Outside of Germany, it is. But I think it is important to not just develop. It also relates to what Paul said. ESG is getting, unfortunately, I mean, I have the impression that even 3 months ago, there was nobody of the developers has mentioned in any way ESG. None of the operators have mentioned ESG, and all of a sudden, ESG is extremely important. But just to finish that, I think it's important to look ahead and focus on also on the data. I mean, we know that the people between 65 and 80 are the fastest growing area of people over the next 20 years, probably 15 to 20 years. And it is not just building and developing nursing homes. It is not just developing senior living as a service living. I think it is important to also focus on several niche sectors like dementia, for example, outpatient service concept. And therefore, in our view, it is extremely important not just to develop, but rather focus on the number of people, the age of people, and also focus on the availability of staff in the different areas. So develop, yes, but develop with a concept and develop based on data research and thoughtful strategy, I think.
Yeah, Berthold, you are right, but you see the bottleneck in the moment is the development. This is a bottleneck now. We are a ESG investment. We are an impact investment. This is not the question, but you need product because
but product,
the market.
Yes,
yes. Even in the nursing homes, you have a new product. All is investment in stocks and not.
To be honest, I think the most hindering factor for let's say the lack of product is probably not the lack of number of developers. In my view, it's probably the value of land plots. In our view, it's extremely difficult to develop appropriate nursing homes or even senior living in the majority of the cities because the cost of land plots is as high. And of course, ESG, to be honest, it contributes to a certain extent also to the cost impact and to the cost of properties. And I mean, we have the advantage that we need senior real estate in not only in the top cities. I think that's a great advantage of Germany on the one hand, but on the other hand, inside and rather in the fringe areas of the top cities and in the top cities is almost impossible. I mean, you know it probably better than we do, but it's almost impossible to develop an affordable estate and a senior real estate concept.
Now we step very deep into the details of the German market, and there, I don't know if in the audience are any participants out of the government sector, out of the municipalities and the construction offices of each of the cities. What you mentioned, Berthold, is right. If you try to invest or to develop a care home in the city center of Frankfurt, Munich, Hamburg, or somewhere else, based on the investment costs, you will never be able to run this on an economic way. And for that reason, there the cities are requested and to offer land maybe on a land lease basis or whatever they are able to offer, because otherwise the supply for affordable housing, affordable care, affordable nursing homes won't be possible.
But Paul, this is a big difference between the nursing homes and the serviced housing.
Right,
because for us it's difficult in the A cities because the sites are very expensive.
Yes,
but we can afford it. With our premium brand, we can afford it. See, even the prices in the A cities, but for us, the B and C cities are a better opportunity for investment. That's for sure. Yeah, but this is one big question to have the right site, but you have to develop it. Berthold.
Yeah, but I completely agree. But Dr. Held, I mean, you're in the advantageous position that you focus on the premium segment. But I mean, we all know that not everybody can focus on the premium sector. We have a lack of supply in the other sectors as well. And this is it is and you with a senior living concept, especially, you're rather allocated to the resi market than to a typical nursing home market, in my view. And therefore, it's not a problem. It's not a problem to compete with in top A and especially in B cities, but it is definitely a problem to build affordable housing, senior real estate.
You are right. We are not an affordable product. Yes.
But Dr. Held raises the point that there is a shortage, and it's not entirely clear who's going to be filling this gap, Berthold. Now, in fact, since you mentioned it, I'm going to ask you, your company was responsible for one of the biggest deals earlier on in this year when you sold a big portfolio to Swiss Life. 435 million or 425 million or something. Would you just take a minute to explain to us, for example, what it was that motivated them? What were you selling and what were they buying in terms of hope, in terms of market position? What was the deal about?
Swiss Life basically bought a diversified nursing home portfolio across Germany, consisting of 27 nursing homes, with average lease weighted average lease term of around 18 years. To be honest, I mean, I don't want to communicate too much on prices and the details, but comment too much on that. But I can only say that we were surprised to a certain extent on the pricing of the pricing, because I think it is justified based on the portfolio. For sure, it's a good portfolio. It's diversified portfolio. It is, but on the other hand side, such number of assets in one portfolio is just not available in the market. And I think Swiss Life utilized the opportunity to get even more grip in the German market in one deal, and that to a certain extent, for sure, contributed to the pricing.
Charles, let me say, yes. I don't understand this market for nursing homes. I can't understand. Yes, because
can we explain it to you?
I think the risk earning relation, it's crazy. A nursing home, yes, has 30% real estate and 70% operation. Yes, service homes have 70% real estate, 30% operation, and I can't understand the factors they pay now for the nursing homes. I can't understand it. I think it's affluent capital we have in Germany and all over the world, which can explain this.
It's interesting. For example, Edifica, the big Belgian group, also paid a lot of money recently to buy, I don't know, I can't remember how many, Berthold, you can probably tell 19 assets. Are you suggesting the same thing there, Dr. Held, that people are so desperate to get in that only by buying portfolios at a premium can they get entry into the German market? It's a notoriously difficult market.
I didn't understand. What was the question for me?
The question basically is the only way, therefore, for investors to get into the market.
Charles, it's one thing. The rent are too low in the nursing homes. They are too low, and the market, the market performs only because the yield compression, the yield depression. The rent are too low and the prices are too high. Yes, we have to have 20% more rent, yes, and 20% less prices. Then it would be
very
okay.
Good. Samuel, you're listening patiently to all of this from these men who are operating at the front of this market every day. What are you hearing?
Well, first of all, I would like to compliment what Dr. Held said earlier, about 5 minutes ago, that the provision rate, so comparison of beds to demand, is about 1% in assisted living or service living segment, which is dramatically low.
Yeah.
And there will be a huge pressure on more supply. And should the more supply won't come, then the yields will go down for sure. But also the fact that Dr. Held mentioned that there need to be more products so that the market get used to it, and it's good for everybody. We've been in other rented residential asset classes at their early age, when sort of there was little product, and it took a little bit, couple of years to get the momentum. So more product is desperately needed here. And that also drives transactions. There is not so much to transact, to be honest. So, or invest in. So most of the liquidity is going to new development. So we have 16,000 beds to be developed in next 2.5 years in this asset class, while 15,000 is in private sector. And most of the stock, about 2/3, is in tier 2, tier 3 cities, not in A cities and tier 1 cities. So the situation around transaction, like we recently saw, like there was probably the most liquid quarter, Q1 2021, in senior living in Germany in last couple of years. It's driven mostly because, as Berthold said, there is not that much to invest or transact in this asset class, and we will most likely see more. Now we are at around 100,000 euro per unit transaction ticket, and about 100 something beds average asset size to be transacted. Most of the assets are transacted on individual basis, not portfolio, because there are not that many portfolios. But the situation is really undersupplied. There is minimum opportunities to transact, and most of the opportunities are in new developments. And I am not that kind of an expert as probably Dr. Held or others. We are researchers, and they are in the field and in operation. But so I don't know what's the real bottleneck, why there is no more development, whether it is land availability, is it lack of developers or lack of opportunities. But definitely more development would be an answer to the future years and maturity of the asset class.
This is, I guess, important.
What about the individual size of the assets then, Samuel? Really, it's about investability. It's about creating enough product, suitable product for investors to be able to invest. And it looks as if that gap is going to be there for a while.
That's also part of a problem that, and I'm curious what the gentleman will say. The average size of an asset in this asset class is about 42 rooms, while the subject of, when the asset is subject to transaction, is around 100 rooms, so the bigger assets, because the capital is looking for volume in this asset class. And the size of the assets are not that sizable. So it's a lot of properties, a lot of development, and many of the pension funds have a minimum ticket size 21 million, and the assets are not there in that size. So they are not transactable or investable for big pension funds. So maybe the gentleman has something to add why the properties are not greater or larger in terms of unit count.
We come again deep into the political and government structure of Germany. And we have 16 states with 16 different laws for the healthcare sector. And a couple of the German states have a limitation up to 100 rooms for a care home. And you can't build it bigger. So it's a 100-bed nursing home, and the value is between 10 and 50 million. And right, this makes it difficult to invest huge proportions. For that reason, we are aiming for this so-called quartier solution, where you have assisted living, living for the elderly, kindergarten, pharmacy, care home, so that you can sum up to 40, 50 or 60 million in one plot. And this makes then investing interesting. And then coming back to the question, why should someone invest in a nursing home? It's always a question of yield, value, and risk. And if you pay 50 basis points for your liquidity in the bank account and you get 4.5% for a nursing home investment, so you are earning really money. And this is for your long-term obligations, a very important issue. And the same is for the value. In a market where scarcity is the predominant driver, value is a good aspect to invest in such a portfolio or in such a market. And the same is with risk. As I mentioned at the beginning, the investment in a nursing home or in the entire healthcare sector has shown very resilient to the economic crisis. And this makes it very interesting for an institutional, long-oriented investor.
Yeah, Paul, and I would agree basically, but to be honest, I think it's also a matter of comparison to other asset classes. I mean, if you compare investing in office, for example, but even more in retail or even hotel. I mean, let's assume to buy an asset for 4.5%. Put 50 to 60% leverage on it, you will end up with 5 to 5.5% cash on cash. And if you have a bit of yield compression, you will end up with 5.5 to 6% IRR with a very, let's say, credible tenant, long-lasting lease contract, lease agreement, double net. I think, to be honest, in relation to other asset classes, especially if you look on retail, even food retail, to be honest, I think over the next couple of years, we will see some development in that as well. Even also on office. I mean, there's so much insecurity in those asset classes. Don't talk about hotel anyway. I think it is absolutely reasonable in the current interest rate environment to invest in this asset class. I mean, of course, if we see a major change in that, somebody or some players might have an issue, but I think we can agree that there will not be a major change over the next couple of years in the interest rate environment. So, in a nutshell, I think it's still, and it will be, even if the yields will decline, it will be a reasonable asset class.
Berthold, it's like the old times at Internet where we work together. I can't agree more.
Hold on.
Perhaps noch one figure, Charles. I have to say one side of our development. Yeah, for example, Riviera is 90 million euros. It's like a portfolio in nursing homes. Yes. One side we offer, and therefore I think we are interesting for the investors because it's the size of our projects, and we will have projects over 100 million euros in the future.
This is right, Michael, and yeah. I guess for that reason we have it in our focus that we invest in such projects. It's not only the nursing home. I do not want to focus only on those, on this sector, but it will combine everything together, and there will be also the living sector you are covering. And we would be happy to work together with you.
Yeah. Let's discuss the earnings and risk. It has to be interesting.
I'm pretty certain that there's a lot of questions coming in on all of this. And
Charles, can I comment on one thing? Which, sorry to interrupt you,
yes.
But I think that might be important for to get a bit of even more grip on the discussion. I think, we talked about regulation. Dr. Held, for sure, rightly focuses on his concept and etc. I think Paul mentioned one reason for that diversified situation we have currently is regulation. We need more developers, but I think, let's face it, in Germany, to be honest, I think the market is not yet established at all. We don't, 2 years ago, or even 3 years ago, everybody was focusing on nursing home, inpatient nursing home.
Yeah, you're right.
Nobody was focusing, again, Dr. Held, you were the front in establishing a service living concept. Nobody else. We don't have any major brands establishing service living concepts. We don't have any major brands as it is in France, in Belgium, in other countries, especially in those countries. We don't have any brands who are widely spread across the country.
Yeah, you are
well-known
absolutely
brands.
right.
I think the market in Germany is really at the beginning of its, let's say, establishment, coming from the nursing home.
Great to hear.
Berthold, understand me. We don't need additional investors for nursing homes in Germany. We have enough. This is my opinion. We don't need additional international investors. They will increase perhaps the price. It's not bad for the developers, but we don't need it for this. We need it for other assets to develop. That's all. Yeah.
The market needs differentiation, needs brands, needs developers. But as I said earlier, I think it needs developing, needs branding, needs concepts. Yeah. And what Paul said, I fully agree. I think the more integrated concepts consisting of a small nursing home, consisting of an assisted living, consisting of a senior living, consisting of a staff training center, consisting potentially of a kindergarten. These concepts will be rather the future than the nursing
for
home.
The present situation, you are absolutely right. But we talk for the next 10 years. Yes,
and we haven't even
develop in Germany.
We haven't even talked about medizinische Grundversorgung or Rehab Zentren and all of these other categories within it as well. I mean, it's very good to hear, though, of the upward potential. I have to go to Andrew, though, because I'm pretty certain he's got.
Yeah, we've got a mountain of questions, and I can only apologise to everyone.
We can only handle a couple of them, Andrew, unless we wanted to hear most of the evening. But I know it's a very interesting subject for a lot of people.
We had one earlier from Michael Kroger who asked the panel, how do they see the influence or impact coming from the large portion of public organisations and the churches, or is this a totally separate segment? I also had a question on yields, which we can, set Paul and Berthold arguing again, which was how different are the demands and yields of independent senior living versus assisted living versus senior living for dependent people?
Let's have a quick. Let's deal with that quickly, if we could. Paul, quickly on that subject on yields. Which direction are they going? Still downwards?
Yeah, I guess there is the pressure is there. There is lots of demand, and the pressure on yields is keeping on. Nursing homes 4.5. The more residential the character is, the less assistance it is, the more expensive it is, because there's always a third, second use for it. For that reason, if you go down the scale, you will reach 2.5 for residential.
If I may comment on that, I would agree. The yields will go down. We see for nursing homes the yields reaching 4.25%, to be honest. And for, as Paul said, rather as long and as much as create moves into the resi sector as Dr. Hell's concept, service living, it will be definitely by end of the year, definitely way below 3%, 4%, 3.5%, 3.7%.
You're right. Our factors are between 25 and 30. Yeah. Yes. Yeah.
And this is what your research, Samuel, is showing also.
Very much so, as Paul mentioned. The nursing homes 4.5 and assisted living, senior service living towards 4.
Okay. Andrew, is anyone asking a question there? I can't see your questions, but is anyone asking a question about conversions, trying to create new assets out of or repurposing other assets?
I haven't seen any questions on repurposing, but I have seen some questions on whether stationary care homes in Germany will be replaced by facilities with service, and to what extent does the panel expect this? And also a question about 5G and telehealth that will become more efficient, and would they consider that it will be or has to be incorporated into the service provided by any senior housing?
Dr. Held, I'm sure telehealth is a big part of your existing offering, is it? Some form of closeness via internet to doctors.
Yes,
and so on.
Of course, this is an important part because now our the people in our facilities, they have smartphones, they have all these things, and it's very important for us. And it's not so easy to decide which system you like to take. But yes, on the other hand, it's the biggest supplier in the service living, our non-profit organization.
Yes,
but this has more, I would say, a tax reason.
Yes,
it's our non-profit organization, but they work like the private sector. They work in the same.
But
way.
I'm sure that in all of these categories, even if it's comfortable living, the closeness to medical facilities is always an advantage. I mean,
yes.
We've been seeing this also with the growth of
as I said, we made our joint venture with this big health company. It's the fourth biggest health company in Germany.
Yes,
and the biggest church company for healthcare. For this reason, we think the importance will increase in the next years. Yeah,
very good. Very good.
In all sectors, we see that foreign operators are getting much more grip in Germany. And when we started looking into the market 8-9 years ago, there was roughly no foreign operator. And now you can find operators in Germany running 30,000, 40,000 beds in nursing home capacities. And this is really a change in the market.
Yeah, the biggest operators in Germany are foreign operators. I mean, let's
5 years ago it was Pro Signore. Yes. I don't think, or right. 10 years ago. Yeah.
Andrew,
which is not a bad thing. Which is not a bad thing, to be honest. I mean, again, I think Germany is more or less in its infancy of the differentiation of the market and the development of the market, and therefore I think German market can benefit from foreign brands, from foreign operations, from foreign concepts. So therefore, I think that's a good thing.
No, they brought more professionalism, to the German market. Yes, this is the French companies. Very welcome.
I think some of them are also
in Germany.
Some of them are they come well equipped with the knowledge that every state is different in Germany, and there are different rules that apply everywhere.
But Charles, not so different. Yes, they are. It's not.
But you cannot be dilettantish about it.
Very, very small. Yes.
Yes.
Don't be afraid about this.
that's an excellent. Andrew, what else have we got?
Okay, well, there's a question about the reassessment of living in less crowded cities or rural areas due to the pandemic, and Errol points out that here in the UK there's been downsizing and moving to the country, and asks, is this being seen in Germany? It's perhaps a question for Samuel. And if this is the case, does it mean that sellers would have funds to buy a second home in rural locations, perhaps by the sea and in the sunshine? He says.
It's all lacking in Germany.
That's all.
I would say it's the contrary. Now we have these retail sites in the cities. Yes, we get offers daily from Kaufhof, Karstadt sites in middle-sized cities, and we think about to invest in these sites, because it's it's a urban and all the quality we need for elderly people.
Yeah.
Yes.
I think I would agree. I don't think that there's this let's say movement from the urban agglomerations and from the urban areas to the rural areas is probably a temporary development. I think that Germany is diversified already hugely. We all know that we cannot compare it to UK or France. We have top 5 to 7 cities. We have 15 to 20 B cities above 400k inhabitants. We have more than 80 cities above 100,000 inhabitants. So we have a hugely diversified regional markets, different markets. So I think the driver in the medium and longer term will still be the trend of urbanization. It will still be the community development, and that will lead to more integrated locations with good micro locations, with good accessibilities, public transportation, and all of that. So the trend, in my view, in the medium term, will certainly not be move to the rural areas, but it will be moved to the urban agglomerations and integrated locations.
Well, Samuel was also just about to answer that before it was snatched away. Samuel.
Well, I cannot say anything else. Just confirm that what Berthold said. Probably I will add a couple more reasons why this is happening. The major reason is urbanization. So it's the other way around. People, especially in Europe, are not necessarily moving to sunshine destination to retire, like we see in the United States.
And we'd remind Berthold, we can't all live in the high Alps.
And in Germany, it's very, very difficult.
So this
to find this place.
Although we think that's just the background to your screen background. Berthold.
No, Charles.
I can confirm that this is not a product that is somehow desired neither by the tenants nor by the investors. But there is one additional strong reason why the seniors stay and live in cities rather than in smaller cities or beaches, is that they want to be close to their relatives, and the relatives want to be close to them, and the relatives live in the city.
Yeah.
So that close tie actually holds them from such a wild mobility that now the COVID would make a big change. It might make some change, but it will not permanently impact this asset class as much as it probably will impact office or retail or hotel. So the tie with relatives is really important.
This is, I guess, a good point, Samuel, to live together with the parents. And for that reason, the quartier solution we are looking for is, I guess, it's something for the future, where you have affordable housing, you have the care, you have pharmacies, doctor services, kindergarten, maybe a school in an adjacent area. For that reason, this is, I guess, something which we all need to discuss with all the cities, that they offer locations and plots where we can develop such investments.
Well, with an eye on the clock, Andrew, I'm going to hand back to you, I think, because if you've got one or two more questions, you can put to the audience. But we normally don't like to go on much past about 60 plus 20 is about 80 minutes.
Yeah, if I could just go back to the question I asked earlier, which I then put another question there, is about the influence or impact coming from the public organisations and the churches, or whether that is a separate segment from the point of view of the panelists.
I guess the influence of the churches, at least in the intensive care sector and the nursing homes, is reducing because they are lacking capital. And in the past, they were operators and property owners. And I guess they have to free up capital and selling the nursing homes, because otherwise they won't have any potential for growth. And the competition with all the huge foreign groups, operating groups, is huge.
Yeah, and perhaps one thing we should mention: assisted living is not regulated in Germany. We have the regulation; it's not regulated. Yes, Samuel. You said there is a regulation in assisted living, but it's not true. We haven't. Yes, only the nursing homes have certain regulations.
Yeah, and I just want to comment on that question. I think what Paul said could be underpinned, because regional and churchly organizations and non-profit organizations typically and historically, in the majority of the cases, were active very regional and not national wide. And in today's market, you need to have strategy, you need to have possibilities for scalability. you need to have a concept, and I don't think that especially the churchly organizations will be able to compete with the market as it develops.
Yeah, they are regional organized, Berthold. Like the diaconie, you have different diaconies all over Germany. In the Catholic Church, is a little bit different. Caritas could be a nationwide supplier, but okay.
Well, what I can see here is that, and I'm sure our audience can as well, is that there's a lot of substance, a lot of material in this whole business of healthcare and senior living. We spend most of the time on senior living today, but I can see there's a lot of further questions and content out there that people are anxious to know about, keen to know about, and it's a big subject. So I suspect we will be returning to this subject, Andrew, sometime again soon.
Yeah, I think so. Yeah. But I guess that's, as you said, Charles, we have overrun. So a good point to wrap up for the proceedings today, and we can revisit that topic, I think, as you say, at some point in the future.
If I briefly interject there, Andrew, when you mentioned earlier at the very start, you said there are two things in life that are certain. Death and taxes, and that's true. But I also heard a third one a while ago. Somebody said to me, there are three things in life that are certain: death, taxes, and changing planes in Frankfurt Airport. I can just say I look forward to the day when we'll be able to do that again.
Okay. John, thank you very much.
Thank you to everybody.
I'm looking forward to getting lost in Frankfurt Airport, which I do every time I visit.
You need to come more often.
Yeah, thank you, Paul. I'll take that as an invitation. Anyway, could I please extend our thanks to you, the panelists today, Berthold Becker of TSC Real Estate Germany, Dr. Michael Held, Terragon AG, Paul Muno, Principal Real Estate in Germany, and Samuel Vetrak of Bonard. And could I also thank Julia Momotiuk, Samuel's colleague, for the presentation of the research from Bonard and Mosaic Asset Management at the start of today's discussion. Thank you, Charles Kingston of REFIRE I'm thinking of senior living, REFIRE for moderating today's roundtable, and thank everyone for attending the event, which will be available to watch and listen to again via the Targa Communications website, where you will also find details of our future Investing in Germany roundtables. Please stay safe, and we look forward to you joining us again soon. Good afternoon to you all.
Thank you very much.
Bye. Thank you.
Thank you for the
Thank you very much.
Thank you.
All the best to you all.
Thank you all. Bye-bye.
Bye-bye.